In the late 1990s, about the time I moved out here to Colorado, the technology and the telecom sector was booming here on the Front Range, and it was kind of fueled by what some people thought would be an infinite demand for broadband. That was followed, obviously, with the great telecom meltdown of 2001. And I'd like to ask the panel, what lessons did you learn from the great telecom meltdown of 2001? And secondarily, why do you think it's different this time around? And I guess, at this time I'm going to start with Dan. I mean, if this is the Supreme Court, I think he's in the Chief Justice position, something that he fits quite nicely into. So Dan, why don't we start with you on this one?
Yeah, it's been a wild ride, and all of us up here have been in it, and probably half the people in the audience were part of the ride as well. I think what's not different is that the internet is growing at a very rapid pace. The internet, throughout the initial boom, through the meltdown, and through the resurgence, the internet's always been growing at, pick your number, 30, 40, 50, 60% a year. And growing at maybe 35% now a year, or 40 on a much bigger number, it's just skyrocketing. The iPads, the iPhones, and all the other devices people are using are sparking the growth of the internet. But what's different is I think we're more mature and more responsible as both managers and investors. We care about really making money on business plans that make sense, and on a line of sight of really understanding kind of cash flow. So much more grounded in the pragmatic aspects of what makes a business work. And we learned some hard lessons during the day. So to me, that's the biggest difference.
Jack, go ahead. Yes, and the panel, you can take over. I'm not going to. You don't have to raise hands. Just go for it.
Yeah, I'd say lessons learned. One is for anybody that's a manager, there are different ways to say it, but I'd say facing the truth. And as we were growing like crazy as a company, it became pretty obvious that there wasn't the demand that everyone had thought in the industry. And I think we faced the truth reasonably well. In retrospect, there's probably about 1,000 things that I'd do differently, but I think that is one. If you're leading a business, facing the truth is probably one of the things that certainly jumps out. Is pre-funding your business plan is a good thing to do, just in case the capital markets ever close.
I'll build on that a little bit. I think the other thing to really assess is the supply and demand risk, and that's what we're talking about here, right? So these infrastructure bets that were made back in in '99 and 2000, these were big bets. So you're talking billions of dollars as far as investment is concerned. So when you start looking at that risk portfolio as it relates to supply and demand, that's really the key element here, right? So we all thought the demand would be there, but all of a sudden there was a glut of supply, if you recall, as well, from a fiber perspective. So what you start looking at as far as balanced investment is really understanding what that supply and demand risk is.
I'll be the unabashed capitalist for a moment, which is out of that meltdown it's almost the gift that has continued to give, quite frankly. Many of the business plans that are represented at this table wouldn't be in their current form or have as much potential as they have, or businesses that exist, if it hadn't been for that poor approach to the late 90s from an investment perspective. And I think people underestimate the extent to which smart money and smart management teams and operators continue to take advantage of that period, late 90s, early 2000s. And it is the gift that continues to give.
Yeah, I was just going to add that I think, back to Jack's point, focusing on fundamentals of the business is absolutely important. I think one of the things we've learned through these past two recessions has been that focus around the business. The first time around, as we were running our business, obviously the makeup of your revenue has an impact on how you operate. We were much more carrier-centric back at the turn of the century than we were enterprise-centric, diversified revenue stream. And to Jim's point, that was kind of how do you get all this demand, capture all this demand that was coming. I remember dial-up was still big back then, right? And so back in the day, we had, I talked to the national sales guy that had orders in hand for 14,000 PRIs, right? Voice dial-up lines for consumers. And literally in a matter of 60 days that evaporated, right? So the shift happened so quickly, and you have to be able to be that flexible in the way that you run your business, that really capturing that demand is still an important thing, and we're trying to focus on how we do it, but you do it with basic fundamentals of the business and keep your focus. This time around for us, we kept investing in our business throughout the recession. We focused on continuing to acquire enterprise business, and we didn't lay off people, which is now paying huge dividends for us. So lessons learned, if you can keep that foundation in place, keep the focus around what you're doing in the business, that it does work out.
The lesson that I learned predominantly was associated with Jack's comment about a pre-funded business plan. And my past company, Inflow, went through a total of 5 rounds of financing, a Series A through then D, and then coming back to another Series A, which is a completely different topic. But it's not a good one to say that there were some very dark times. We had 16 investors, and there was this mentality that money was always going to be available. And it was very difficult not to get caught up in this land grab, market share mentality. We had an advisor, a guy named Mike Faraday, who had sat on multiple telecom boards over the course of 30 years. And he kept whispering in my ear all along saying, don't invest and grow beyond your safe harbor. And what he meant by that was, at one point in time, we were building data centers such that we would initiate operations, a new data center each month. We built 21 data centers. Each one of the data centers required $7 million of capital initially to get them running. But it took $13 million in total by our plan before they became profitable. And what he was really saying is you should make sure you reserve the $6 million incremental amount to get them profitable, and don't take the risk of taking that money and reinvesting it in the next data center. And we got caught up in that, and that was a huge mistake that we were luckily enough able to back out of in the end. But it was the formative lesson that I'd say I learned.